Josh! Where's the bass?
Hello everyone. Yesterday I asked Trey and Matt Course to talk to me, discuss with me about AMC and on why they think there are arguments for investing into AMC, what's the case with AMC. Trey at least uploaded a video to his Twitter. He uploaded another YouTube video explaining his point of view. I highly appreciate it, even though he was not ready to discuss with me. At least he's being proactive. He's doing something. Matt Course, on the other hand, just blocked me, was not open to discussion, was using strawman arguments. He was basically using any excuse not to talk to me and then just blocked me, which I found really, I don't know, it just enforces this opinion vacuum that exists within the AMC community. So I know this video is probably gonna receive a lot of dislikes without people even watching it. This video is gonna receive a lot of dislikes because people might not like what I'm saying, but I'm just telling you, please stay respectful. I'm being really respectful. I'm watching Trey's video live. I'm responding to his points. And after that, I will explain on why I think that shorts have closed their old positions. I'm not saying they closed 100%. I'm saying they closed the positions that were bleeding them out, the old ones at around $5. Please remember that English is not my main language. I'm a German guy, so if I mix up some words, if I stutter here and there, or have to think a bit longer about words, please bear with me. As I said, it's not my main language. I speak 3.5 languages. A lot of times I throw together the accents, I throw together words and mix them up. So as I said, just please bear with me. There's not a lot of stuttering or anything going on, but it's some parts that I would like to leave in the video in fairness, so I don't cut off too much. Yeah, this is just a general disclaimer. So I hope you guys are ready for this discussion, even though it's not a real discussion. It's me responding to the video he just uploaded and watching it live. But as I said, please stay respectful. I'm being respectful, and I would hope you do the same. So watch with me. What's up everyone, welcome back to my channel. Today I'm gonna be responding or answering to TreyTrades. He didn't directly talk to me, but he made a video this morning about AMC, the argument for AMC. It's not a live discussion, but at least he's responding in some way. So we're gonna be watching this video now, and I'm gonna respond to his points, because I still think that AMC is over the squeeze. At least it's over, and I'm gonna be showing you in this video on why I think that. So yeah, let's get to Trey's video right now.
AMC, a unique, one-of-its-kind sort of stock that has found its way into the world over the last 10 months. This right here, my friends, my family, my fellow Gorilla Gang, as you can tell by the title of this video.
Okay, so first of all, he says AMC is a one-of-a-kind stock, so a unicorn. There's no such thing as AMC. He doesn't elaborate why he thinks that, so I can't really respond to that point. Although I have to say AMC is not a one-of-a-kind stock in terms of fundamentals. He will talk about fundamentals later in the video, but maybe he is talking in terms of sentiment in general. So this is a point I don't agree with, first and foremost, so I don't think AMC is a unique stock.
Is an atypical stock. This is not something that you would usually see within the stock market. Is what I would like to call an ape stock. Now today what I want to do is tell you guys the risks associated.
Okay, so again, he doesn't elaborate on why he think it's an ape stock, a unique stock, because as I said, it's just a normal stock basically. There have been some things that usually don't happen on the stock market, regarding sentiment, regarding people holding it despite bad fundamentals, etc, etc. But yeah, he doesn't elaborate on that, so I can't really respond to that. So let's keep watching.
Associated with holding a stock like AMC, as we've all seen over the last 10 months. there's a lot of fundamental, so to speak, problems with the stock in which would deter people normally from buying the stock. And yet what you see over the past 10 months is that it defies that fundamental value and has done something unique to the stock market, which is create a whole different sector of stocks. I want to go over this information with you guys here.
So after watching his video, I'm going to respond to why this is not a unique situation. This has happened before. As I said, the sentiment is unique. If you are ignoring stocks like Cors and BlackBerry and Nokia and GME, so these all belong together in terms of retail holding those no matter what happens to them, especially AMC and GME. But as I said, even this graph, this is not a unique one. We're going to talk about that after watching this video.
Really quick, but before we do that, what is up, everybody? I'm going to TreyTrades. We're going to talk fast and eat that. No, I'm playing. I'd like to preface by saying that I'm not a financial advisor expert. So, take what I say fast. I want to go over this information with you guys here really quick. But before we do that, what is up, everybody? I'm going to TreyTrades. We're going to talk fast and eat that. No, I'm playing. I'd like to preface by saying that I'm not a financial advisor expert. So, take what I say the grain of salt.
Okay, so if I understood him correctly, he's talking about not being a financial advisor and that everything he says you should take with a grain of salt. In my opinion, you shouldn't talk that fast because it's important. So, yeah.
Let's get into the video. So I want to start off here with showing you guys a couple things. What I've got pulled up for you is the revenue of AMC stock. I want to show you their assets and liabilities and also the revenue. So what can you see here, right? Their assets versus liabilities. They've got about $10.28 billion worth of assets as of fiscal year 2020 versus $13 billion in liabilities in fiscal year 2020. A net difference of negative $3 billion, meaning that the company is sitting on more debt than they are in cash versus, right? They're not sitting in a spot which is yet in the positive, right? That's typically something that would deter people away from stocks. You can also see that their total revenue is not something that's been super impressive over the last couple quarters, right? $1.45 billion for Q4 back in 2019, and it slowly trickled down. Actually cut down, not even a trickle, it just flat out stopped. And the risk of bankruptcy for AMC stock was off the charts. It was absolutely probable. It was definitely something that could have happened if apes had not recognized something that was actually taking place with the stock when it was sitting at about $2. It slowly made its way back up. 119 million, 162, 148, 444 million in Q2 of 2021, a 2,000% increase year over year. But that is compared to an asterisk, right? It's compared to the COVID-19 sort of era in which kind of plagued AMC stock to begin with. And we can't talk about COVID-19 and this and that. I don't want to dig into that too much, but there is always the risk that that can shut down AMC again, right?
So yeah, his first point, I didn't want to interrupt him, but he doesn't seem to make a break, so I'm really sorry. He talked about the risk of bankruptcy, that apparently it's off the table, if I understood him correctly. It is not. It's not off the table because at the current cash burn rate, I've talked about this a lot. We're going to talk about this after watching this video again in detail. But at the current cash burn rate, AMC, without more stock dilution, is going to go bankrupt by next year, even if revenues should go back up. So yeah, as I said, we are going to take a look at this after watching this video.
It can make the chance of AMC having to close its doors a real possibility. That normally would scare away investors. Stock float history. You can see that this stock has increased its float 5 times over in the last 10 months. It's gone from 83 million shares up to nearly 500 million shares, which is an astronomical increase, a 500% increase in the total float of the stock. Typically, this would scare away investors. Typically, this would be something that would make people never want to look at a stock again. But nonetheless, the stock is what it is. You see AMC stock back in January. Want to look at it?
No, the thing is, because he's saying AMC is a short squeeze play and not a fundamental play, we have to look at the short percentage at the old float. So the more the float increases, the lower the short percentage gets, changes up a bit in March, in April, goes back down in May about 20%. In June, about 23%. This is the most interesting point in the timeline because we're, as I said, going to talk about it in detail after watching this video. But this is where the stock shot up to, I think, $72. So, yeah, as I said, we're going to take a look at this because I think at this timeline, old short positions have been closed. This is why the stock went to $72. Excuse me, and after that, new positions have been opened at around $70. So they are in the greens right now with their short positions, not intending to close right now. That is just my opinion so far. As I said, we're going to talk about it in detail after watching the video. I can't repeat myself often enough. But yeah, I think what happened here is float delusion grew bigger, therefore short percentage shrink down. In June, old positions got closed, new ones were opened, so shorts are in the green right now, and there should be no point in them closing their positions anytime soon, other than AMC miraculously rising back up for some reason to the 70 plus price point, so their shorts would go red again. So as I said, I don't see that happening, but this is my interpretation of the numbers seeing here.
A stock again, but nonetheless, the stock is what it is. You see AMC stock back in January. The stock had a short interest of about 12%, which I would recognize as high, but it is not as high as other stocks, which had incredibly high short interest. Was it high? I would consider it to be, yes, but it was not as high as you've seen with other stocks, such as GameStop, for example, right? That's typically something that may have deterred investors away. You can also talk about the possibility of streaming. I would disagree with this argument that streaming is going to overtake movie theaters and yada, yada, yada. You can point a million different things at why people should never touch AMC stock, but yet what do you see, my friends? You see that AMC is continuing.
So yeah, just regarding that point, as he says himself, there are a lot of points you could point out on why to never touch AMC fundamentally. He believes that a short squeeze play shouldn't involve any fundamentals whatsoever, but I think he forgets that without fundamentals, why should the price rise? Retail doesn't have the buying power, especially with a float of around 500 million shares, to drive up the price themselves. Why should institutions invest if they don't see any good fundamentals? There is just no way, no catalyst for a short squeeze. So ignoring the short percentage, ignoring everything else, there's just no point in the stock rising back up to that high that you can see in the video right now at $73. So I've heard that argument plenty of times. It's just a short squeeze play. It's not a fundamental play. But as I said, you're ignoring the point that without fundamentals, the stock just doesn't rise. It doesn't rise by itself, other than shorts maybe closing, and then it's going to rise, but that's the short squeeze. And with a short percentage of, I think right now it's 17%, we could go into the triple digits, but not higher than that. So no way we're seeing 100,000 or even 500,000, because as I said, it's just, it doesn't make any sense.
To do what AMC has done, and that represents the investors of the company, which is 80% owned by retail investors, the apes. 4 million people across the world have all come together to recognize that they like this stock. They like AMC for whatever reason or another. Maybe it resonates with you. Maybe your why behind this investment is as simple as you thought it was a fundamental play. You got it at $5, and now you're just watching to see what actually ends up happening. Maybe you got on this stock because you disagree with.
So first point, he's saying that 8% of retail or of the company is held by retail. A lot of people got in very soon when the stock was around $2, $3, $5, $6, $7, etc., etc. So they are in the big green right now. The thing is with short squeezes, especially if it's still a high short percentage, but if it's only 17% the stock is not going anywhere near 100,000 or 500,000, unlike the belief in the community is. So people that are in the heavy green numbers, they probably set their price points already. And if they see, okay, we just reached, let's say $500, it's going back down, they're instantly going to sell, maybe even sooner. So with 80% held by retail, there's always the risk, because retail is simply not used to having lots of money, that as soon as people reach their personal price points with only short interest of 17%, that the stock is going to pick down way too quick, and there's a lot of people going to be back holding that bought in at 40, 50, 60, 70, etc., etc., etc. So way beyond those single digit buyers. So there's obviously good things and obviously really bad things of people or retail holding a huge percentage in such a stock. So yeah, it depends on the view of your stock or your beliefs on if you think it's a good sign, if you think it's a bad sign. As I said, trying to be as neutral as possible. There's two things, good signs, bad signs, or bad sides.
The corruption behind trying to bankrupt a company such as AMC movie theaters. Maybe you disagree with the infiltration and the corruption and manipulation that comes from mainstream media. There could be a million different reasons, but for one reason or another, for manipulation that comes as AMC movie theaters. Maybe you disagree with the infiltration and the corruption and manipulation that comes from mainstream media. There could be a million different reasons, but for one.
So he himself is saying that mainstream media is corrupt, but the only huge stock you're going to see get positively talked about or YouTubers invited is AMC YouTubers. So if you hold him by his words, he is part of an ongoing manipulation by mainstream media in terms of preparing AMC as a rug pull. So I don't think he meant it that way, but as I said, AMC is the only stock getting positively talked about in mainstream media, or rather YouTubers invited to defend their stock, to talk about it. You haven't seen that happen with any GME YouTuber. So as I said, if he really wants to be held by his words, he is part of the manipulation. I'm not going to say he is. If he says mainstream media, yeah, you get what I mean.
Reason or another, 4 million people have simultaneously agreed that they think AMC stock is worth more than it's currently trading at, and the stock has continued to rise. Right now, there are a lot of people out there, mainstream media, some people on Twitter, some people on Reddit, a lot of faces that would say that the argument for AMC doesn't make any sense because of fundamental value. But when you look at AMC stock, you have to look at this with a different lens, because this is not at this point a fundamental play. This is an ape stock play. And
yeah, I think I've talked about this already. So
that's a very important piece of what I'm about to show you guys here right now, is the play behind AMC stock. So I've got this drawn up here right now.
What was the picture? I thought it was like an interview coming up, but I think he just misclicked.
Is the play behind AMC stock. So I've got this drawn up here. Back in January, the fundamental value for AMC in January, it was just undervalued. It was a $2 stock. It ran up to $25, and even at $5.
It wasn't undervalued though. So, you said AMC was undervalued. It was on the verge of bankruptcy with no positive things inside. So it was properly valued. People thought AMC was going bankrupt. That's just how the stock market works. So it wasn't really undervalued, no.
$5 fundamental play. Back then, I argued that I think AMC a year from that point in time was going to be worth somewhere in that $20 to $25 range, even if there was no sort of squeeze. It would have that monster run up back in June, right? It ran all the way up to $77 in the pre-market, $72 in regular market hours. Phenomenal day. At this point, it kind of grew. It grew away from this fundamental play, this value play that AMC.
The thing is, as I said, I believe that old shorts closing, maybe new ones opening at $70. Even Dave Lauer himself, the ex-Citadel employee that Trey, by the way, invited to an interview. So he seems to respect him. So I'm just going to quote Dave Lauer here and maybe blend in his Twitter. He himself said that it's a textbook short squeeze that happened in June. He's not saying it's the squeeze, quote unquote. But it's definitely a short squeeze. And I think I'm the one saying it's probably the squeeze that people hoped would go to 500K, etc. But yeah, I don't see it happening. So talking about June, every time a short squeeze happens, or has been happening in the past, we can take a quick look at it right now. This is Overstock. This is AMC. As you can see, they basically look the same. They have a support line down here. This is where the stock was usually trading at, so at around $2 to $10, something in between that. AMC the same, it was going about $2 to $10. Then there was this tiny, or it's not tiny compared to AMC, but there was this rise in price. So taking a look at Overstock, when they short squeezed to 130, AMC short squeezed to 72, in pre-market even $77. Stock drops back down because obviously shorts close down, people are selling, people are taking their profits home, and then usually after every short squeeze you have a new baseline of the stock price. In the past they never went back, or rarely ever went back to their old prices, so you always have this new baseline. As you can see, they basically look the same right now. So this is overstock, this is AMC, shorts, shorts covering, stock going back down, people taking home profits, maybe, as I said, new stocks opening. So yeah, it's not really an argument, because in the past it's happened. There's still bullish sentiment, as you can see, but it doesn't mean that the stock is not on its fundamentals right now. It's just after short squeeze that the price most of the times has a new baseline that is higher than the old price. So as I said, it's not really unique, it's not an argument in that sense. So we're going back to the video now.
He was, and turned into what I would call a phenomenal day. At this point, it kind of grew. It grew away from this fundamental play, this value play that AMC was, and turned into what I would call an ape stock. An ape stock is a new thing that you are seeing within the stock market. It's something that's never been had before, where people like a stock, they buy it, they hold it, they treat it as a savings account, and they let it be what it is because they have faith in the...
I mean, that happened before with Tesla, such as an example. I think it was the first stock to have like this huge community in Wall Street bets. So Tesla is, in my opinion, the first ape stock, so to say. So AMC again is not really unique. That's just the point.
The apes on the left and the apes on the right. And then it is further strengthened by fundamental improvement, but it's not reliant on that, as you can see by the fact that...
It is reliant. If you have a short squeeze potential, just because of 17% short interest, as I said, probably shorts open at $73, something around that again, at least the new ones. That's why we went up to that price in the first place. It is definitely that fundamentals have a lot of meaning from now on, because it's not just shorts bleeding out because they open at like $4 or $5. Yeah, without fundamentals, AMC is not going to squeeze.
All of these fundamental reasons why people would, on paper, never touch this stock have not had an impact on the stock price. It has still continued to form this massive bull flag. It has had monstrous growth over the year to date, over 1,700% total growth year to date. It hasn't mattered. And I want to show you this circle. This is what I would consider AMC to be some 5 really key important points, right? First off, you've got community. It's an intangible aspect. It's something that you can't put a number on. You can't put a value on. Having faith in the people on your left and on your right. As an ape, do you believe in the people that you're surrounded by, that they fight for the same sort of market justice and change that you want to see with reform in the stock market? They believe in the same...
So first of all, things I noticed in this picture is 4 out of 5 are just sentimental or opinion pieces. You like the stock is not really a factor or a fact or an argument for investing into AMC in terms of statistics, fundamentals, numbers. Community is not really an argument. Change for the market is not really happening through investing into AMC. And this I can read, but probably believe in management, growing income and restructure back to maybe before Rona levels plan. I mean, we're gonna watch the video still, but as I said, those are not really good points or good arguments. This is the only one you could argue with as an argument, but yeah, we're gonna watch.
Same mission as you do. You also want to see change for the market, right? That's a part of this ape stock. You want to see change for the market. That's why you buy this stock. That's why I bought the stock. I can't speak for you, but as a community, from what I've seen, what I've surrounded myself with.
Okay, I have to correct myself in that sense. Of course, there can be an argument for you. It's just I was looking for facts and numbers, but of course, if that's your opinion or your argument for investing, it can be a point. If you want to have a community surrounding it, if you like the stock, of course, there can be arguments, but I think you guys know what I mean.
These two tie hand in hand, right? People want to see change in the stock market, and that ties in directly with the community. It also comes down to belief.
Okay, but how is AMC changing the market? How is AMC doing anything for changing the market? I mean, GameStop is creating their own NFT marketplace as of now. It's all speculation. Probably trade GME shares there. I mean, that's changing the market. You have a blockchain. You're not reliant on Wall Street. That is changing the corrupt market. But how is AMC doing it? They're just not.
Even management to grow income and restructure business plans, right? I have a lot of faith in Adam Aaron. Did they dilute the stock? Absolutely.
I'm sorry. I talked over that part. I'm going back now.
Directly with the community. It also comes down to belief in management to grow income and restructure business plans, right? I have a lot of faith in Adam Aaron. Did they dilute the stock? Absolutely. They diluted it 500%. Is that something I wish they would have done? Would I loved if it just kept ripping? Who the fuck didn't want it to keep ripping, right? I'd love for this to go just continuously up and up and up and up and up. But I also have faith in Adam Aaron and the management of AMC to continue to grow the company to be a better business, not just reliant on traditional means of a movie theater, which is something that they have heavily alluded to. I have faith in Adam Aaron, I have faith in the management, and I have faith in movie theaters and that they are not going anywhere, and that just simply box office sales are going to improve over time.
Okay, again, this is just a belief, a wish, so to say. So he believes Adam is gonna manage to grow income and restructure the business plan. I mean, he hasn't been doing that well in the past few months, so I don't see how he's going to do it in the future. He's been given he's been giving a lot of false promises. He obviously wants more delusion because he asked people for it and retail declined. He's been saying there are no synthetic shares, there are no fake shares. So again, for a squeeze play, not looking good. Obviously, he's the CEO of a company. He himself is interested in the company still surviving. So he's going to do everything for it, even if it just survives for a few more months. He's probably going to do it. And that's why he wants to sell more shares, because they need to raise money. Without raising money, cash burn rate, AMC bankruptcy. So that's not going to happen. Yeah.
I also believe that there's a high number of short interest and heavy derivatives played within.
So you believe there's a high number in short interest, as I said, 18% for a company that still is on not the verge of bankruptcy, but going slowly into the direction of bankruptcy. 80% is fairly reasonable. People seem to forget that short selling was the thing before AMC, GME, etc. happened. It was for dying businesses to make profits out of them. So AMC, as of now, is fundamentally a dying business. Shorts are obviously interested in taking home profits, so that's why they probably opened new positions at around $73, because they might be seeing AMC going back down to the current to the price before January, or even going bankrupt. So just because it's a high short interest, people always forget. It seems like the short interest, just a high one, is not always positive, especially with bad fundamentals. That's a negative. That's bearish. So yeah.
In this stock, right? There's a lot of puts that are hidden within this stock. There's a lot of derivatives, and market maker, I shouldn't say, I think there's ways they hide information and data within call options and put options. And
so you think there is, but there's no proof. So again, not really a point.
So it's something that I don't necessarily agree with, but is a piece of the puzzle that.
So you don't necessarily agree with it yourself, but you state it on your argument sheet. Yeah.
That overall affects the way this stock moves, and I think will move when it does have its glorious day. And finally, the most important,
which I think it had already.
Like the freaking stock. You like the stock. It's as simple as that. This is a message that was passed down by the pioneer of GameStop. Our boy, our legend, Roaring Kitty, right? The man, the myth, the freaking beer drinking legend himself. like GameStop. At the time, was there a risk for GameStop to go bankrupt? There absolutely was, right? It paved the way for a new type of investing within the stock market and very easily could, and I think will, continue to do what it has done. But he liked the stock. He had faith in the fact that there was a way for this stock to continue growing, and so it did. And that has transformed into a community of other people. You see Dogecoin, you see Shiba Inu, you see...
Okay, yeah. As I said, not really point again. Because... Keith is not related to AMC in any way. So yeah, I mean, if you like the stock, of course you can invest in it, but that's not really an argument.
GameStop, you see AMC. These are all different flavors of tea, right? They're all tea, but they're different flavors of tea. People like different flavors of tea. They all fight for their own different thing. Now you could make this argument. Well, if all these people stop spending money on 4 different kinds.
Okay, if you like the tea analogy, think of this. This is an AMC cup. It's been dropped quite a few times. You know, there's some cracks here and there. Its fundamentals are weak. So you pour in your tea, your hard-earned tea, your money, and you like the tea. You make it really full. One day, because the fundamentals are weak, the tea cup is gonna break, and your tea spills out everywhere. You won't get back your tea. So if you like the tea analogy, weak fundamentals, a weak cup, and your tea is gone. So
of tea and just bought one kind of tea, that'd be better, right? But we can't ding people for liking different kinds of tea. I like freaking...
Of course, you can like any tea you want, but criticism should always be welcome on any stock. There should always be a culture of discussion, always a culture of debate. And what's happening with AMC right now is no other opinions other than AMC is going to 500k is allowed. So things are happening in the GME community in some places as well. I'm not saying it's AMC exclusive, but I just wanted to point out I hate that. And GME is a far steps further than that, because other opinions are tolerated, still not like welcome or not really well taken, but at least they're tolerated. And AMC is not even at that point. If you have a different opinion on AMC, you instantly get, on my videos at least, I get dislike, I had death threats coming my way, I have daily insults coming my way publicly and via direct messages on Twitter, not Facebook, on Twitter, on YouTube, on Reddit. So it's just like this vacuum of opinions, and no other opinion is welcome there. So of course you can like your tea, but you should also like other people's tea. And when other people come to you with their tea and say, oh, maybe look at my nice cup, it's a bit better than yours, you can say, okay, cool, and that's it. And if someone comes your way and says, look at your teacup, it has a lot of cracks, it has weak fundamentals, you should take a look at it and say, oh yeah, it's true, but I still believe it's not going to break. That should be the way we should be handling things, and not people coming your way and say, oh mate, look at your cup, it has some cracks, it has weak fundamentals, and he's like, oh yeah, fuck off mate, no, this is me cup, it's not going to break. So we should always be nice to each other, and I haven't insulted a single person. I have never said sell your AMC and invest into GME. I also don't believe you should do it. You can research anywhere you like. I have never ever said that. So people can hold AMC, people can hold GME, people can hold Doge, people can hold whatever they want, but they should also accept other people coming to them and saying, dude, look at the fundamentals, are you really true? This is a good play, are you really true? You should blindly follow people that tell you to buy into the stock, or that don't question things critically, because they themselves are making big money off of you believing what they're saying blindly. So it's really critical part. It's a really, really critical part. This is just what I wanted to put out there. So let's keep watching the video. We have about 2 minutes left.
Red Ocha tea, baby. I mean, I think Ocha's green. I don't know. I've never had Ocha, but nonetheless, you like the stock, and that ultimately is what an ape stock is you like the freaking stock. You have faith in the people surrounded by you, that they will buy and hold, that they have conviction in their investment. They have conviction in the people and what they fight for and what they stand for, and they want change for the better for everybody. Is AMC a fundamental play? Are there fundamental problems with the stock? There absolutely are fundamental problems with the stock. You can pick anything about any stock and argue that there is a bear case and there's a bull case. There's people that are still making a bear case against Tesla.
I mean, of course you can do that, but you have to weigh the bull and the bear case. If you say, as an example, let's say Apple, say they have like 200 million in debt. That sounds like a bear case at first. And if you take a look at those 200 million and basically say, oh, look at them, they're spending the 200 million on something really great that's giving them a great return on their investment, and they can pay off the debt by next year, then that's a heavier bull case than a bear case. Because first, bear case looks, okay, they have debt now. Bull case, oh, this is going to get some great returns, get priced into the stock, and the stock's going to rise. So it's you can make that about any stock, but it doesn't really make sense. So
do you think those guys are right? I mean, look at Tesla, right? It's by traditional values, it's an overvalued stock, but it continues to grow quarter over quarter and year over year, and I think it will continue to do so.
Yeah, because as I said, it was the first, as he likes to call them, ape stock, with a community that doesn't give a shit what mainstream media is saying. They are just going to hold Tesla and keep buying it.
In the same way, you can make that argument for AMC. There's not a single stock in the stock market that will always remain at true fundamental value. And AMC has transgressed that fundamental value. This is an ape stock, very similar to other plays that you see happening, like I'd mentioned before. That is the most important thing that I can say about this investment. Now, I can go on and on.
But yeah, you keep saying it's unique, but then the next sentence you're saying it's not really unique because there are other plays. So just maybe I am understanding something wrong, but yeah.
About the TA and the data and information that's updated on a daily basis. But the truth is, if you have money in this play, you already know. I can't find my mouse. It's so hard to see. If you're in this play, you already know what it's about, right? You know the data. You know what this company is. You know that they're at a negative cash flow right now. You know what's happening. But you have faith in the people and the community that surround you. You have faith in the fact that there could be change caused by people like you. And that's ultimately what I think is the most important aspect of AMC stock. That's what I'm fighting for. That's what I'm going to continue to fight for. And that's what I've got for this video. So hope you guys are having a swell freaking...
Okay. Yeah, I think I actually responded to every single point he made. If not, you can say it in the comments right now. And now we're going to take a look at the things that I've been saying we're going to discuss at the end of the video about AMC. So yeah, everyone, responding to the part of Trey saying that AMC is not like any other stock, we have the latest example of a textbook short squeeze here, overstock.com. They squeezed from $2.53 from April, around April 20 to around $130 in August. And as you can see here, they basically look the same. The AMC chart and the Overstock chart. They have the bullish sentiment still, they have almost the same support levels after the squeeze, and they have the same baseline after the squeeze, indicating that when Overstock shorts were forced to close almost 100%, the same happened with AMC basically. New shorts opened all the way in the top. That's what Dave Lauer said as well. We're getting to his tweets after showing you those graphs, but as you can see here, they are basically the same. They look the same. They are basically the same. It's a textbook short squeeze in both. So looking at another short squeeze, we are going to take a look at Volkswagen. As you can see here, this happened all the way back in 2008. It was almost the same. We have this new baseline that happened to be there after the squeeze. The stock was trading before the squeeze at around $150 to 200 euros. After the squeeze, it was trading at around 250 to 300. So as you can see here, after a textbook short squeeze, the stock has a new high. That happens to almost any stock short squeezing because the baseline just gets higher after that. After the price reached those unimaginable quote-unquote heights, the stock just trades at a higher value after that. So it won't get back to the low levels before a short squeeze. So we have Overstock.com, we have Volkswagen that basically look the same as AMC, and yet somehow AMC is supposed to be different. So we are going to take a look at the AMC failure to deliver data as well. As you can see here, this is AMC, the all-time chart of FTDs. We are going to take this look at the from starting April failure to deliver data. This is the short squeeze that played out. You can see it, the price was $62 at this chart, going all the way back down to $35. And as you can see down here, those are the shares failed to deliver. We are taking a quick look at GME as well, just as a reference point. And wait, let me look at here, FTD. So we should be, yeah, there it is, as a reference point on what GameStop looks like now. And as you can see here, there is still some huge spikes, meaning we have open failure to delivers, yet still after a lot of them, around 100 million got covered through put options. And as you can see here, it's just not the same with AMC. We currently are at 2,800 FTDs. That's the latest one. The highest spike after the squeeze, as you can see here, this is on the same day. So let's look after the squeeze. The highest ones were around 5 million, or rather 4.5 million rather. And after that, it just doesn't get as high. We're at 1.6 million with a float of 500 million shares outstanding. With GME, we have 350,000. We still have 1.3 million, and that was with a short, with a float of around 25 million public float, and an overall outstanding float of around 74 million. So as you can see here, this is just as a reference point. The spikes are much higher with on FTDs with GME. So in general, if you want to compare those two, you can see that AMC just after that doesn't have any more high FTDs. So basically, all shorts closed. That's another hint. So let's take a look at Dave Lauer's tweet and what he said. On June 2nd, he said, "When I tweeted about AMC squeezing a few days ago, a lot of AMC's fans disagreed. Some of you disagreed. It was the subject of naked shorting too. 1 month ago, AMC was trading at $10. It's now over $60. In my opinion, any trading professional would call that a textbook short squeeze. It is. It had extremely high short interest and likely significant amount of naked shorting. There was no fundamental data that came out that would result in a 6 times increase in market cap valuation. I have no idea if this is just the beginning or if it's the end. Another important point, this squeeze has taken place over the course of a week. Closing prices, you just state them. Where will it end today? It ended at about $50. A lot of you point to increasing short interest, but given the level of trading activity, it's very possible that these are new shorts and that existing ones are being closed. This is what I'm saying. Steady or increasing short interest is no indicator of what's going on here as far as I can see. AMC is trading a multiple of its float every day. Now, that level of trading activity means you can have shorts covering while have new shorts open positions. So they probably cover the ones bleeding out that were open at around $2 and now have new ones at around $70 to $77. So you just won't without, that's why fundamentals are so potent. You won't get back to that level ever again without fundamentals. So you won't squeeze those shorts open at $77, which is around 18% of the float now. It's okay if you disagree with me. I'm just expressing an opinion. I'm not advocating for anyone to take any action on it, just explaining how one trader sees this action. And like I said, I have no idea if this is a squeeze, the squeeze, or maybe just the beginning. Who knows? Of course, that's what I'm saying as well. Nobody knows, but it is my interpretation of the data. And as I see, the first two comments just don't make any sense. Shorts have not been covered though. They have. Shorts have not been covered and interest continues to increase. I truly don't understand how you could come up with a conclusion that this is the squeeze. I'm sorry. Or even some form of it. It's just organic FOMO. So yeah, 1.6 billion shares traded seems to be organic FOMO. Okay, no, it's not. It is a textbook short squeeze, looking the same as Overstock, looking the same as Volkswagen. There are no high FTD spikes after that, meaning shorts have covered. And as you can see here, there are still some FTDs that date that could easily have been covered. because as soon as they increase, the price increased again. And as you can see, spike went back down, price went back down. So this could be FTDs being covered again, and therefore shorts covered. So I don't understand how this is a unique situation still, with 11% short interest in January, with around 18% now, but those 18% are probably opened at around $70, which, as I said, that's why fundamentals are so important. We are not going to see again without fundamentals. So yeah, this is the short squeeze part on why the shorts has squizzled, squeezed. A lot of you might not like to hear it. Maybe I'm just interpreting everything wrong. I would like to hear your opinion on it. And please, as I said at the start of the video, no hate. Please just state numbers and facts. I'm being respectful, and I want you guys to stay respectful as well. So please do that.